Hey, what's up guys, John here. The cost of living has gotten so out of control that retirees worldwide are in massive panic mode. They're liquidating their 401K's at levels in which they've never imagined.
So many Americans facing hardships because of inflation and a shaky economy.
Americans are tapping their retirement savings, pulling money out of their 401K's at an alarming rate.
Inflation is getting out of control. Here's an example. The cost for groceries since 2020 has increased 25%. This is from Bloomberg. Used cars up 35%. Major appliances up 12%. Car insurance up 33%. Curtains 20%. Restaurant food 24%. Electricity 25%. Rent 20%. Water and sewage 16%. Everything is skyrocketing, yet wages are softening and in some cases even decreasing. So what's going to give? It's going to be the quality of living. The quality of living is going to fall in a very, very big way in America. And many people that own homes, retirees that own homes, especially on fixed incomes, are being pushed into a corner. And I believe what's going to happen is we're going to see a flood of home inventory continue to hit this market, but not before we start to see 401Ks continue to get depleted to levels in which many people can't comprehend. I'm going to show you what's going on, and I'm going to show you a video that I saw on Twitter that's going pretty viral, 140,000 views in 2 hours, of a single mom talking about what she's going through right now that I think is extremely relatable for almost all of us. I'm going to break it down for you. Please hit the like button. When you hit the like button, YouTube will share this content to educate other people about what's happening. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free strategy session. Take a look at this. So I'm going to show you the video. It's 2 minutes. I'm only going to show you the first, call it, minute. So 136,000 views. I mean, this literally just came out. I'm going to refresh it. So let's see how many views this video has now. So this video so far, 148,000. So it gained about 10,000 views in the last minute or so. But look at this.
Cost of living is quadrupled. Just to get groceries has now costed me a second mortgage. Let's be serious. I have 8 people to feed in my house. It's literally between $1,200 to $1,400 a month just to have groceries in my house. So now my credit, that's been great pretty much my entire life, because I've always believed if you can't buy it, don't have it. So I've never had credit cards till recently. Last couple years I've had to get credit cards just to get by certain things, school clothes or certain Christmas. Let's talk about that. Extra added expenses when I'm already struggling. My mortgage gets paid every month, but it's not at the first of the month. It's definitely at the end of the month. I mean, my bills are getting paid, but I'm falling behind every single day because I have to pick and choose which bills to go behind on so I have groceries in my house.
This is what's happening. And I've been talking about this coming, where people are going to start making decisions on who's going to get paid and who's not going to get paid. Just like this lady is going through right now, tens of millions of Americans are going through a very similar situation. They're saying, you know what, 43.5 million Americans are being obligated to pay their student loans for $503 a month. They don't have that type of means to fulfill the obligation, right? Most people, 2 out of 3 Americans don't have $400 in the bank. So how are they going to fulfill? They're not going to. They're going to start making decisions. Who's going to get paid? Food is going to come priority, and then it's going to start going down from there. I think we're going to continue to see defaults on credit cards, on auto loans, on personal loans, on mortgages. Landlords are going to start having a harder time to collect in a lot of situations, especially in the higher end apartments. I think we're going to start to see a lot of change happen in this economy. But look at this. 401k balances are down, and last resort hardships withdrawals are up. And look at what's happening with 401ks. So a growing number of Americans are making emergency withdrawals from their 401k retirement accounts to cover a financial emergency amid chronically high inflation, according to new data from Bank of America. About 18,040 workers taking part in employer-sponsored 401k plans made a hardship withdrawal during the 3-month period from July to September of 2023. According to Bank of America analysis of client employee benefits programs, which tracks about 4 million accounts, that marks an increase of about 13% from the end of June and 27% from the beginning of the year. Hardship withdrawals allow workers to tap into their 401ks for immediate and heavy financial needs. Individuals who make these types of withdrawals owe income tax on the money and could be hit with a 10% early withdrawal fee if they are under the age of 59 and a half. However, the penalty can be waived if workers provide adequate evidence that the money is being used for a qualified hardship such as medical expense. Someone who takes a hardship withdrawal also cannot pay it back into their 401k, cannot roll the money into another retirement account. I mean, the average is about $5,070. So you start to look at this, you have to ask yourself, what's going to happen next? What's going to happen next? Well, retirees that work their entire lives to build up this nest egg, they're looking around at the world saying, I was banking on 2% inflation, 3% inflation, normal living standards. I'm going to be able to cruise right through retirement that I worked my whole life to provide for myself. What are they going to do? They're going to start liquidating. And one of the big liquidations is going to be their home. They're going to have to sell the home in many cases, especially when you start to look at, the data points. Look at this. Half of boomers and late Gen Xers who took early retirement during the first wave have already fallen into poverty. In the UK, nearly half of UK adults, 50 to 70, who retired in the first 2 years of the pandemic are in poverty. This came out, this is, the Hill magazine. That came out in July. This is July 7th. This is America. So America and UK in the same exact situation. Then you're looking at this. Millions of older workers are nearing the retirement with nothing saved. Nothing saved. Here's what I think is going to happen. With the average Social Security checks of September 2023, according to the IRS data, the average Social Security payout for retirees as of September 2023 was $1,841. Spouses of retired workers drew an average of $888. This means that the average retiree household in which a spouse was also the drawing benefits received a total of $2,279 per month or $32,000 per year. That amounts to $13,000 above the poverty line for a two-person household. Now, $13,000 above the poverty line, even $3,000 a month is basically poverty line. At least it should be with this new cost of living. Because everything, if you're renting a basic apartment, it's $1,500. Car insurance, gas, cost of food, everything, you probably need to make $4,000 to $5,000 per month in most areas just to keep the lights on. And in many areas, that's probably not even enough, right? But look at what Kiplinger is saying. Kiplinger is saying, as a silver tsunami of homeowners passes, however, upwards of 20 million homes are expected to hit the market through mid-2030s. That will bring a sea of change that housing officials and developers say needs to be factored into long-term use and valuations. The good times may be rolling now in Latitude, Sun City, and the Villages, but there's reason to be judicious and cautious when considering the long-term investment values and market for these 55-plus active communities. So this is going to be a very, very fascinating type of situation we're walking into. It's the rug pull on retirees. It's the rug pull on America's middle class. That's what's happening right now. Don't get confused, because the rich are going to get a hell of a lot richer over the next couple of years, and everybody else is not, like point blank, right? The next couple of years, it's going to be a moment, a very, very big moment for people to make smart decisions, very, very smart decisions to position yourself to quickly climb up the ladder. Because once that door closes, what I think is probably going to be 2025, 2026, when that door closes, it's going to be very, very challenging to open it again. And that's what's happening right now. We're walking into a situation where, 2020, 2021, very, very cheap to borrow money. People went out there, bought tons of property. They made investments. They bought, maybe they overspent in some areas. And now realizing that, the economy is not going to go back to normal. Things are going to get a lot harder. What am I going to do? Right? Taxes and insurance continue to rise. Rents are starting to soften. What am I going to do? Right? The key is going to be buying hard, real assets and having really, really strong income streams to weather an inflationary world. Because I personally believe inflation is never going back to normal. We're not going to see the 2% inflation. We're not going to see the 3% inflation. We're going to continue to see this. Unfortunately, I wish this wasn't the case, but if you look at the policies being enacted, you look at the way in which we're moving, you look at the way in which the world's going, you're going to realize that this is probably going to continue for the next year, 2 years, 3 years, 4 years, probably indefinitely. And as this happens, what are people going to be forced to do? They're going to be forced to sell. They're going to be forced to walk away. They're going to be forced to hand the keys back, right? And so you want to be in a position to where you have cash. You have access to money. You have access to credit. You are in a situation where you can pivot and move. In the past, having money was having, wealth. Today, I think having money buys options, and options, being able to pick up, move, do whatever you want to do, start new companies, close companies, being able to access credit lines, doing whatever you want to do, that is real wealth in this new normal. Having options, being able to move around, from opportunity to opportunity, because we're going to see so many industries change and so many things change over the next couple of years. There's going to be, I believe, some pretty big moments in time where you're going to be able to pick up distressed deals, you're going to be able to do things. But you got to look at this. Look at the data. Look at the real numbers, not what they're saying. They're not saying they're 2%, 3%, 4% inflation, because they talk about that now. When you look at the true cost, going to the grocery store, you look at what things really cost, you do the numbers. You realize, are we moving in a direction in which policies are going to get more radical? The way in which the world's moving is going to get more extreme, or are we going back to normal? You tell me in the comment section below, but I think you know the answer to that. I think you realize things are about to get a hell of a lot harder for most and a hell of a lot better for a small group of people. Drop below. And if you want to fix your credit to position yourself, what I think is going to be the greatest rug pull in American history, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free strategy session. Catch you in the next video.